Please read this disclaimer carefully before proceeding further. Happy New Year, traders. Welcome to analysis of gold XAUUSD. My name is Vic. Thanks for joining me here. We are going to start from scratch now because we have just started a new year and there have been few changes to structure as well. So I'm going to revise the whole analysis and we're going to be starting from higher time frame because in our FCP methodology, a multi-time frame analysis is the key. So we're going to be starting from higher time frames and we'll look at some of the important structures and important formations which majority of the analysts and traders miss out. So I'm not going to be starting from monthly time frame. In fact, I'm going to start from a yearly time frame. Now, if I look at this, what do we have? The market has gone up, then fell down, then started to go back up. Now, this is very, very important. If you can notice that, the market was not able to close above the previous high, which means that market is kind of created a double top sort of thing with a divergence on the yearly time frame, and the last year actually ended with a bearish candle here. Now, usually what happens is that in such cases, market tries to fill the previous gap, or sorry, the previous wick. So this year can be bearish for gold by just looking at the candlestick structure here. Now, it depends on how the market is going to open. If the market starts to open very heavily towards the upside, there can be a little bit upward move, but I'm still expecting by the end of the year, there can be bearish move. Of course, this can change because I'm looking at yearly time frame and a lot can change during that. And remember, I'm always bullish on gold and precious metal. So in my opinion, gold is continuing to go higher. Doesn't matter whether it comes down here or here, but over a long period of time, it is continuing to go higher. So, but we trade what we see. So what I can tell you that, by just looking at this candlestick behavior, the market is expected to fall down this year, at least to fill this wick up, and that is a possibility. Always keep that in your mind when you're trading for a long period of time, like when you're trading for extended profit targets. Okay, so let's look at now 6 months time frame. Now 6 months time frame is also kind of bearish because if you notice what we had here is this: market went up, okay, and then started to go down. This is an engulfing sort of candle here, which showed like the market could fall down. But because the previous momentum was really, really high up, like this was very powerful upward momentum, the last 6 months was like kind of like going towards like that momentum once again. But as you can see, this was not enough. Okay, this has not been able even been able to like close beyond 50% of the previous candle. Forget about like going beyond this. So that shows that the bulls actually found good momentum, but it wasn't enough. So for the next 6 months, it can continue to fall down and fall a bearish candle, which is in line with our 12-month analysis as well. Now let's go and look at the 3 month time frame. Okay, now 3 month time frame is kind of interesting because this is what is happening. This is a very strong bearish candle. This is a very strong rejection. Okay, this was indecision. The market went up, but you see what's happening here is alternate candle. So bear bull, so that means there can be a bearish candle for next 3 months or so, and if it continues to fall down, then it can turn into 6 months bearish candle, and then there can be 12-month bearish candle as well. So next 3 months can also be bearish just by looking at these alternate candle scenarios. Now let's go and look at 2 month time frame. If I go to the 2 month time frame, similar sort of situation is there. We have very strong candle move down, then we have alternate sort of candle. So bullish, kind of bearish because rejected from the top, and still little bearish here, then bullish, then bearish, then bullish. So that means next 2 months can be still be bearish now. So everything points that the market can be bearish on higher time frames. And if you know that on Vata and Visa system also we have been getting bearish priorities there. That does not mean that we cannot take bull trades or long trades. We have been taking them, but we always keep in our mind that this is bearish, this can turn into heavily bearish. So we always just plan our trades in advance like that. Okay, now let's go and look at the monthly time frame. Now if I go to the monthly time frame, what do we have? Okay, majority of the traders, what they will notice that they will say that this is cup and handle. Now in FCP methodology, we do not look at cup and handle because it's hard to quantify that. We are going to look at WNM patterns all the time, right? So because WNM patterns can be measured using Fibonacci, and they can be quantified easily. Once you have the numbers behind your structure, once you have the numbers behind your trading plan, it becomes very easy to predict, and it becomes very easy to follow as well. So instead of looking at this cup and handle, what we see is that market is creating simply a W pattern here, and when the market completes a W pattern, it starts to fall down. So, like, if you remember, this is where we started from, near about 2070 level. The market completed that W pattern, and we have been shorting this market all the way to 1680, and 1680 was the first profit target, and we went long, and since then market has been going up and down here. So this is simply a consolidation, sort of sideways move. It can be hard to predict. It can be, like, very easy to predict depending on your strategy. If you are a breakout trader, and if you're a breakout swing trader, then it can be really hard at times. But if you know how to trade WNM patterns on smaller time frame, then it can be very easy as well. Now, let me give you a very subtle clue, like, why I said 1680 was going to be my profit target. I will simply take the Fibonacci and take it. I'll draw from bottom to top, and you will notice that this came to right into 38.2 Fibonacci levels, right? So that's why this was acting as support. Now, later on, what happened? The market came down into the same area, created a double top, okay, sorry, double bottom, and then started to go higher. And since then, there have been a lot of rejections. Like, the market tries to go up, it falls down, goes up, falls down, goes up, falls down, right? So this is kind of consolidation which is happening to the sideways. Okay, so let me show you a few structures here which are very, very important here. Okay, right. A lot of traders will actually do something like this and say that, this is a fake breakout, like, this thing. Okay, on this time frame, there can be fake breakout, but obviously in this case, it is not. So how do we trade this? We trade using simply WNM patterns. Why? Because they can be quantified. So we have a very nice W looking pattern, and when W completes, the market goes down. Okay. Now, what it is doing right now is also creating a kind of W pattern here, and which we'll talk about in a second, because we are going from top to bottom. So let me go through this weekly, and then we'll go to daily, and then we'll go to lower time frames as well. Okay. So, if the market is going up like this, there is a good possibility that it can fall back down, because the W pattern will complete and it can start to fall down. However, we cannot we cannot ignore these important levels. So this is very important level of 1760. Okay, this is very important level of 1680. There is a very important level of 1806. Now 1806 is not exactly level, it's like, area around that, like, $5 or $6 up and down, so near about that. So 1810 to 1800 level, that is kind of like, very important level as well. Why? Because you see, market makers, they try to use some kind of, like, a guidance price, like, they try to move their prices around that area, kind of pivot sort of thing. And last year was 1806. Now this can be something completely different this year. Okay, so if I come to now daily time frame, actually, sorry, let me go to the weekly time frame and show you a few more things. Now here, what is happening is this. You see, the market is simply, oops, sorry. So the market is simply creating an M pattern here. Okay, and when M pattern completes, the market is expected to go down. Okay, so right now this can actually come around 1550, 1570 level, somewhere around there, where we have 200 moving average as well. um, 200 moving average is a very important tool in gold trading, because you will notice that if you put 200 moving average on a chart, it will start to act as support and resistance. And it also points out at a very important levels when you're doing the technical analysis on gold. Now this thing is simply sideways movement which is happening, and this can still be absorbed very nicely in this M pattern. So this M pattern is still valid, but because we are looking at weekly time frame, it can take a long period of time, it can take months, it can take whole year to actually do that. But this is still a possibility, that 1550 to 1570 level, that is still a possibility. Right, so it will only be invalidated. This thing will only be invalidated once the market has gone and closed above this level here, which is what? Let me actually put a line there so that you know what level I'm talking about. So there are two levels actually. One is around here, 1878, and the next level is around this one, 1915 level. Okay, now why I'm saying is like that. See, right now what we have is an M pattern, a possibility of M pattern on weekly time frame, which may take several months. If the market goes and closes beyond this level here, it will turn into a W pattern, which will be something like this. Now from there it can fall back down and still form that M pattern. However, if the market goes and closes beyond this level, then it will turn into bullish. Okay, so until on weekly time frame we get a close above 1878 and then 1918, it is not going to be bullish. It is not going to say, like, now you cannot say that market is going to go all time high and all that, right? Because you can anticipate anything, but you must trade what you see. So these are very important levels for higher time frames. And on the bearish side of things, these are very important levels. So 1618 is 1680, I already mentioned. This is also very important, 1740, 1760. This is also very important right now, with where we are near about 1828 and 1830, because we have previous rejections here, previous liquidity area. The market is right there and it can start to fall down once again. So these are very important levels again. Okay, let's go and look at daily time frame. If I go to the daily time frame, what we have is that the market created a W pattern. It's in the process of actually creating a W pattern, which is around here, and it does not actually complete here. It actually completes slightly above. We'll see that when we go to another chart. It completes a little bit higher, but it is right there in a structure level and in an FCP zone as well. Okay, so we have previous structure here, and we are right there. Okay, we had previously a head and shoulders pattern. Okay, and that is kind of like, that one is not valid anymore, but we still have this one. This pattern is still valid, so that head and shoulders pattern is still valid. And because we saw a lot of movement going upwards, breaking some of the technical analysis, which means that market makers may try to move it slightly higher and then come back down, bring, like, just to collect the liquidity to the bottom, like, to the low, to the downside. We have this previous liquidity area, okay, which is around 1766 to 1744, near about this area. Okay, so I'm expecting that some point in time the market is going to come back down and collect this liquidity. Okay, this will only turn into heavily bullish once it has broken through this 1878 and closed above. Remember, around 1882 there is a gap. So if this market goes above 1787 1878, touches that 1882, falls back down, it is still bearish. What I'm expecting is to do is, like, it closes above 1878 and manages to stay above 1882 as well. Then only it will be bullish. Otherwise, it will simply form an extended W pattern and it will fall down. Remember, higher time frames are telling us that market is still bearish and it can fall down in the long run. So you should prefer short positions more rather than long positions on gold. Okay, until, like, something changes, which I've already discussed those two levels. Okay, so let's look at some of the scenarios here. Let me just clean this up. Okay, what do we have here is that market is, let me bring in the Fibonacci. So if I draw something like this, the market has simply come to this level here, 50% here. That means we are right at 61.8, and that is why it can fall down, because we have previous structure, we have 61.8, and it can start to fall down. But if this market continues to go higher, it can go all the way to near about, so there is an intermediate level of 1836 or so. What and research also shows that, but it can go all the way to near about 1851 to 1862. So this kind of area it can achieve. Why? Because we will have a W pattern there completing there. So how do we trade this? in coming days, like obviously, like when the market will open tonight or like tomorrow for you, then make sure that you're not trading immediately. Let the market settle, because there can be a lot of reactions. It is opening after a long time, it's a new year, new month and everything, so there can be a lot of reactions. So make sure that you only trade when the market has settled down a little bit and has started to show some confirmations in your anticipated direction. So right now, if it is right it at this level, I will expect market to give me a confirmation to the downside, and if it gives me that, then I will look for a short position. If it gives me confirmation to the upside, then I will go and take the long position. Okay, on the long position, I will continue to hold this neighborhood 1851 to 1862 area. Okay, and then from there I will look for a short once again. If I'm going short from 18, from this 1828 level where it is right now, if I'm looking for a short position, then also I will be looking for approximately 1804 1806 level as my first profit target. So this is like without doing any kind of analysis, just based on the structure here. Let me go and show you the actual chart. Okay, so on the actual chart we have this. Okay, so I have already drawn some of the levels here, and I will keep on updating them in Telegram groups and Twitter and other places. So we have a gap left around 1882. This is what I was talking about. And these are the FCP zones that you should be aware of. Right now, we are in FCP zone of 1828, so it can fall down. And if it starts to fall down, then some of these levels are going to be very important. So for you, this, like 1806 is also important. We have 1812, and then we have near about 1801, and then I will probably update you a little bit later, because there will be a little bit of structure change here as well. And if the market continues to go higher, we have 1835, 1839. That is an important level. Otherwise, as I said, it will continue to go to 1850, and then we have 1862, and then we have this high of 1877, then 1882. These are levels, but remember, my bias is still bearish. Unless, like I see a confirmation to the upside, I will go for long. If I see a confirmation to the downside, I will go short on this market. But as I said, on higher time frames, it is still bearish, and I'll continue to hold that until I see something else. And in that event, in that case, I will definitely update you in Telegram group and other places. So hope you enjoyed this analysis. Hope you enjoyed this. Hope you found this useful. If you did, make sure to hit the like button and share it with other traders and trading communities, because they can also benefit from it. Right. I'll see you in the next one. Happy New Year. Thank you for watching. Find and follow us on these social media channels.